Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is April 4th, 2018, and we're grooving out to some Rakim, Know the Ledge. Shout out to my man, this is my guy right here, New York Crypto Pro. He wanted me to play the song, so there you go, fella. Hope you guys are doing well today. And we got a few things to talk about. Actually, I'm going to talk about two articles today. One relating to this recent downturn we had overnight. Maybe it's related, you know. These news outlets and, you know, writers and stuff will try to correlate things. And maybe it is, you know. So we'll take a look at it and let you guys judge that for yourselves. But first, let's take a look at the market cap. We are sitting at $258 billion. Back down, people. Bitcoin's dominance is back up 45.3%. And red, man, red everywhere. Just red. I decided to actually get out of any ICO that was US based for now. I'm just gonna sit on the sidelines with that in regards to that. So I'm just, because of the whole Centric fallout and stuff, just need to see how things go, man, because I'm telling you, they had a product, and you know, I'm just kind of concerned about how strict and how far these regulators will go with shaking it up in the crypto space. So I'm sidelines at the moment, but let's take a look at my algo. I just want to give you guys that heads up. Algo actually but sold my long positions at a loss of about 2% altogether. We take a look here. These two positions were sold, and I don't have my the coding enabled for shorts, because like I said, I didn't want to have you guys getting alerts for shorts if you weren't actually shorting. So that's kind of useless, and many of you probably won't be shorting, but still profitable. And if you wanted to short, you would have shorted right here at 68,790, 79, something like that, if you wanted to go short. Yes, why? What was going on? Why the reversal? We were slightly above my support or resistance line, I should say. We hovered there and actually almost did like a head and shoulders, a mini head and shoulders here. Shoulder, head, shoulder. And what happened? Well, at least this is what Zero Hedge is saying happened. Bitcoin tumbles below 7,000 after Binance hack fears. So it says here, as reported by Forex Live earlier, there is a login issue at Binance, and it has created more fears about a possible hack or other liquidity fears, sparking FUD-driven selling pressure across the crypto space. So, man, it says here the entire crypto space is back in the red for the week. Crazy. With Bitcoin, I'm gonna read that. I just wanted to show you guys this. Check that out. We were on our way up, people, and then bam, that fundamental news. I told you, fundamental news can come out of nowhere, irrespective of technical analysis. So yeah, that's just what it is, people. So article goes on to talk about finance magnates reports beginning a couple hours ago. The Binance Telegram group has been inundated with complaints from customers who cannot log into their accounts. To its credit, Binance was quick to respond to the Telegram group. Says here, we are aware of some users experiencing issues logging in. At the moment, our team is working to resolve it as quickly as possible. Please bear with us. In the meantime, it should be resolved shortly. I don't know, people. I mean, you know, to me, this shows that sentiment is still very negative in the crypto space. And what I mean by that is any bad news is kind of, we overreact to it. If we were in a positive, if the sentiment was good in the crypto space right now, things like this we would just kind of brush them off. It may be a little pullback slightly, but it wouldn't be as dramatic as we've had with today's pullback. You know, look at, I mean, if you look at this pullback, man, this happened roughly around 7,300, and we pulled back almost 500 points. So a little over 500 points. So not a good look. That's just over or just shy of 10%. So like 8% or so, just off of one exchange being possibly hacked or liquidity issues or whatever the case may be. So let you know that this market is very fragile because it's in a negative sentiment. And that's what I was talking about the other day. It takes me back to 2015-ish, when the sentiment overall was just negative. So this is not good. This is not good. We gotta somehow get that sentiment to change before we see any even not even all-time highs, just breaking some of the previous highs, like, you know, 9,200, 10,000, 10,002, and really 11,006. So I'm not I don't feel like we're there yet. I really don't, till that sentiment changes. And I don't know, sentiment changing takes a long time. It's not like a flick of the, you know, click of the finger. So in relation to that, I wanted to show you guys this article from a couple days ago, and it's regarding hedge funds and their poor performance. So before I even read it, I think why the hedge funds in the crypto space are having such a hard time is because of just what I just said, negative sentiment within the crypto community. And unlike hedge funds in equities, there aren't as many hedge funds in the crypto space as there is if you were to compare it to the equities market. And there aren't as many long only funds in crypto. So you've got, like, over here in the equity space, yeah, they're having gyrations. It's going crazy because of these trade wars and stuff, and you're seeing, like, you know, it's dropped. Like futures this morning was down 500 basis points, Dow futures. You see these types of things, yeah, that's cool, but it would be 10 times worse if people didn't have to be in equities. Like these funds, most of the way the system is set up in the equities game is that money is always first constantly coming in from pensions, from 401ks. So there you got all these funds that are long only, and they have to buy, and so the liquidity, the put, it is there for buying. Unlike crypto, though, that isn't the case. So it's going to be a hard job for these hedge funds to really make it a positive year for cryptocurrency portfolios that they're managing. So it says here, cryptocurrency hedge funds experience poor performance and shutterings. The violent cryptocurrency bear market trend of 2018 has proved too much for many cryptocurrency hedge funds. The average performance of crypto funds has been a loss of over 20% so far this year. I got to give a shout out too. That's funny. I'm sorry, I got to cut this. It's funny because this article was actually shared by New York Crypto, and I'm playing his song request today. How about that? That is amazing. And these song requests are, like I said, a month behind. So it goes on to say here, it made me remember that because I said to him that in these instances, it's all about who lost the least amount of money. You know, if hedge fund X lost 20% and hedge fund B lost 8%, people are loving hedge fund B. They want to take their money over there. So it says here, with at least 9 cryptocurrency hedge funds having been reported to have ceased operation, at least 9 cryptocurrency hedge funds have already shut this year. Reports are indicating that cryptocurrency hedge funds have experienced a significant reduction in demand for exposure, with many funds posting losses for 2018 so far and others closing their doors entirely. Among those to cease operation are Crowd Crypto Fund and Alpha Protocol, with Alpha Protocol recently publishing a message informing investors stating, considering the potential regulatory and market risk, Alpha Protocol has decided that the best approach is to refund the private sale contributors. Oh, they're citing regulatory issues or possible issues, because I did see that some SEC have been going after some hedge fund guys as well, not just ICOs. So they're trying to really make a statement here. In addition to the closures, several industry players have reneged on previous plans, with Sequoia and Andreessen Horowitz-backed Polychain Capital deciding against conducting a Canadian initial offering in January. That's big. I mean, any of you guys finance know about Andreessen Horowitz. That's big money there. So Mike Novogratz also opting against launching a cryptocurrency fund in December, instead choosing to work on a merchant bank focused on crypto related ventures. Interesting. See what I mean? Like all these big, you had Novogratz on CNBC saying Bitcoin this, Bitcoin that, we're starting this, starting that, and now boom, everything is ceased. And so that's what I mean by sentiment. Like the institutional money is not there. Maybe the institution, and here's my theory about why we drove up to 20,000. It's not because of some conspiracy. They want to mess everything up. No, these types of guys, these hedge funds, they started raising capital, getting people funds to flow in, because it wasn't like Wall Street. These are just like smaller, to me, smaller firms that were raising capital to invest into Bitcoin and cryptocurrency markets. So I think when they saw the options, CME options going live, that gave them some confidence and some legitimacy to go ahead and start really raising funds to start these different hedge funds and such. So that's my take. I think that's why we went from 6,000 or 4,000, 3,000, or wherever you want to call that base, where we really start to rally. That's where I think we went from there all the way up to $20,000, was because of institutional funds, small family funds coming into the space, not some conspiratorial. They're trying to shake out the weekends and do all this. I highly doubt it. I highly doubt it, guys. And actually, I'm going to show you guys. I'm going to link to this because I almost read the whole article, but I'm going to link to this in the. I'm going to pin this below this video today. But I do want to show you guys something. I'm going to show you the CME futures volume for March. So if you look at, jump over this to the CME's website, you can see the futures settlements and contracts are. And I was trying to show you guys last month's contract, March contract. Let's see here if I can find. I don't know why this is acting up right now. So you can see the volume here for March, basically, right? And if you add all of these up, you add all of March up, man, you'll see it just is not, it's not enough to justify a real huge manipulation here going on. It's because, for example, if you look at like March 27th, futures volume was 4,300. Now, if you guys don't know, I'm gonna go over to this page. 53 or 40, was it 4,300? I think it was 4,300. I don't know how much of that was short and how much was long, but let's just say it was all long. Even at 50 or 4,300, you have to, each contract is 5 Bitcoin. So if Bitcoin was at roughly, I'm just gonna say $7,000 to keep things easy for us. 7 times 5 is $35,000. So each contract is worth, at that point, would have been $35,000, right? And so from there, you want to just multiply 35,000 times, let me go back to the, I can't go back from here. You basically want to multiply $35,000 times 4,300, which is, let me see what that is. $153 million in volume. Now, again, this is a cash settled mechanism right now. So unless you feel like people are looking in the spot market, are looking at Bitcoin's price, Bitcoin's futures price, to make a determination on which direction they want to go, I highly doubt it. I think people are just straight spot trading the spot and making choices off of that. But again, I think that the run up we've seen were the small family funds becoming pretty overzealous about crypto, you know, these hedge funds, starting these hedge funds. And with them kind of having issues, now they have redemptions and they have to return all the money, so they have to liquidate. On top of that, we've got Mt. Gox. Now that, you can call that a conspiracy, because there's no reason why, a conspiracy fact, there's no reason why the Mt. Gox person over the funds and, you know, returning the funds lost to those in the Mt. Gox incident. There's no reason why those trades shouldn't have been done OTC, over the counter. There's no reason. Easily could have been done. But instead, he wanted to go out into the open market and slam the price down. So that, with, you know, in conjunction with these hedge funds probably liquidating and starting redemptions. Hey man, it's a number of things. I don't think it's a conspiracy though. And on top of that, in order to short in the CME futures, you have to have 5 times margin. So 5 times margin would have been, that means if at $7,000, if at $7,000 and, you know, one contract was 5 Bitcoins, that means that in order to short, you need roughly, I would say, $170,000 to short one contract. That's how much margin you need to put up. It's just not, you know, just not worth it. So will the futures be used in the future? Is that like a railway, a infrastructure for them to start, you know, manipulation in the future? Absolutely, absolutely. And I've stuck to that from the beginning when I heard about it. So just giving you my 2 satoshis, people. So like and subscribe. Make sure you guys click that bell. And those that who are actually already subscribed, please make sure that bell is clicked, because they will unclick it on you. So that's pretty much it for today, ladies and gentlemen. I know it was long-winded, but I had to get it out. It's your boy Crypto Blood, and I'm out. Holla.